Hello buddies, welcome back to Caperswaytech. This is Harsha. So this video is going to be about the various factors you should consider before opting your education loan. So this video is going to be a one-stop solution to all the things which you didn't know about the banks and their loan process. So this video will be coming in two parts. This is the first part since there are many points which I have to cover. Without any further delay, let's get into the video. The first important factor you should keep in your mind is interest rate. Even a 1% difference in the interest rate creates a lot of impact in the long run. The interest rate doesn't matter if you repay your loan in 3 to 4 years, but if your loan extends till 7 to 10 years, then it will impact a lot. Even a 1% difference in the interest rate can give you a difference of 30 to 40 lakhs during the long run. But we don't know whether we can pay our loan in less amount of time, so it would be better to go with a less interest rate education loan. The second point is percentage of education loan they give you from the I-20 amount. So if you consider NBFCs, non-banking financial companies, they give you almost 95 to 100% of the I-20 amount. But when you look at private banks, they give you around 80 to 90% of the I-20 amount. And when you look at government banks such as SBI, they give you around 70 to 80% of your I-20 amount. So it's the best thing to confirm with the bank like what is the percentage of amount they're giving from the whole I-20 amount. The third point is processing fee. Bank charges a minimum amount to process and approve your loan. So this amount can vary between 1 to 5%. If you consider NBFCs, they charge around 4 to 5% extra from the loan sanction amount. If you consider private banks, they charge you around 1 to 2%. And if you consider government banks such as SBI, they charge you a fixed amount which is around 10 to 15,000. For example, if you take a loan of 40 lakhs from NBFCs, you have to pay 5%. That is, you have to pay additional 2 lakhs other than the 40 lakhs. And if you consider private banks, it's around 3%. So you have to pay additional 1.2 lakh. So these processing fees from private banks and NBFCs are quite high when compared to government banks. So I suggest you to go with government banks. The fourth point to note is the mode of disbursement of the money. So some banks, they directly disburse the money into your bank account after your loan is sanctioned. Some banks, you have to request the amount, 1 week or 2 weeks prior so that they give you the amount semester wise and you can pay your tuition fees. And the other method is some of the banks and NBFCs, they directly pay to the university instead of giving the amount to you. So it would be better you confirm with them which mode they prefer. The fifth point to note is the tenure. So basically a tenure is the amount of period the bank gives you to repay the loan. I suggest you to take minimum of 7 years, which would be safe and ideal for you. The sixth point is secured or non-secured loan. So basically secured loan means collateral and non-secured loan means non-collateral. So what is collateral? So basically collateral means surety or guarantee which you have to give to the bank, such as house, flat, non-agricultural land, FDs, that is fixed deposit, term life insurance policies and government bonds. And the bank will return these only after you repay your 100% of the loan. So non-collateral loans are completely opposite of collateral. So there is no need of giving any surety or guarantee. The bank will directly approve a loan for you, but the interest rate would be slightly higher when compared to collateral loans. For example, consider SBI. It's a government bank. They give you up to 7.5 lakhs, which is non-collateral. But as you know, 7.5 lakhs is not enough for your education loan. So above 7.5 lakhs, you have to show a collateral, that is a surety. The interest rate for SBI, it's around 8 to 9%. If you consider private banks or NBFCs, such as Axis Bank, they charge up to 12 to 13% of interest rate. When you consider HDFC, they charge you around 10 to 12% of interest rate. So as you can see, the non-collateral loan interest rate would be higher when compared to collateral loan. And even for NBFCs, they have interest rate from 10 to I think 9.5 to 11%. The interest rate is always negotiable and it varies according to your profile and your sponsor's profile. So whether they can repay their loan or not. So I suggest you to go with collateral if you have a property equal to the loan amount or more than the loan amount. If you don't have any property or sureties to show to the bank, you can go with non-collateral loans. So there's one more point which you have to keep in your mind is if you're going with collateral, that is if you're giving your property as a collateral, for a bank loan. So what it means is you cannot sell your property until and unless you clear 100% of your loan. So you cannot sell your property since all the financial documents and all the registration documents of that property will be with the bank. So unless and until you clear 100% of your loan, you cannot sell your property. And one more important point to note is everything comes back to the time period. If you pay your loan just in 2 to 3 years, then interest rate doesn't matter, and even collateral or non-collateral doesn't matter. Only if you are considering, the tenure period, like you want to pay till 7 or 10 years, then you have to think about collateral, non-collateral and interest rates. So the next point to keep in mind is the requirement of a cosigner. So basically what a cosigner is, he gives the bank an assurance, a surety that you will be paying the loan in a given amount of time. If you're not able to pay the loan in given amount of time, he will pay the due amount on behalf of you. So basically a cosigner's job is to assure the bank that you will be paying your loan in given amount of time. If you fail to do that, he will be paying the loan instead of you. And NBFCs don't require cosigners, I think, whereas private banks and government banks require a cosigner. So the next important point to note is income tax benefits. Suppose if your sponsor is working in India, suppose for example if you have taken a loan and your sponsor is your father, he can claim income tax benefits on the education loan which he is paying for you, as he is a cosigner. So gradually what happens is your interest rate will reduce since you're getting additional income tax benefit from the education loan. So I guess you can claim income tax benefits from private and government banks education loan, but from NBFCs you cannot claim income tax benefit. So this is another disadvantage with NBFCs. And one more point to note is if you want to claim income tax benefit, I think you should be working in India. So basically you cannot claim income tax benefit, whereas your sponsor, he or she will be working in India, so they can claim the income tax benefit. So the next point is very important. It's the reimbursement of the loan sanction amount. There are some specific cutoffs for some banks or even on tuition fees and living expenses. For example, if you have opted for a 40 lakhs loan and your loan is sanctioned, but even in 40 lakhs, they have a separate cutoff for tuition fees, separate cutoff for living expenses, and again a separate cutoff for miscellaneous expenses. So it's better to confirm with the bank like what are those cutoffs so that you won't be facing any problem in the future. Take care. See you in the next one. Bye bye.